Hey everybody, it's Debbie, and we are live on location at Ron's entity structuring event in Jacksonville, and this is why he cannot do Ask Ron at the moment. So instead, we're going to have Barbara and Alton, who are on standby to take your questions this week. There they are now. They're reading over the questions and getting prepared for their answers. So here we are. Here we are with Barbara and Alton.
Well, hello.
Live on location in Jacksonville, Florida for this week's edition of Ask Ron.
Hey everybody.
Hi.
You guys ready?
We're ready.
We're ready.
We're doing it.
Okay, Barbara, you've got the questions.
So I have the questions. I'm going to ask the question, and Alton's going to answer.
I'm going to answer the question.
We have a question from Ben Grise from Indiana.
Hey, Ben.
And Ben says, Ben here from Indiana. We have a property under contract, and our title company found an IRS lien attached to the property. The amount of the lien is significantly higher than the value of the property. My attorney at the title company tells me that the IRS lien will not release the tax lien. That the IRS will not release the tax lien. We need the seller to cooperate with us to negotiate the tax lien based on our purchase price, but the seller is not willing to do so because they will not receive any proceeds at closing. What's the solution to handle this tax lien so that we may purchase the property?
That's a great question. Run. Run fast as you can. Next, move on to the other one. There's absolutely nothing you can do, Ben, where you don't have cooperation with the seller because they know they're not getting anything. They owe way more money to the IRS, unfortunately, than you can actually, yield from the deal. And the IRS is not going to be so gracious enough to lower what they owe. So for you to try to negotiate a tax debt down for that seller and they're not cooperative, it's probably not going to work. So you should probably go find you another deal because that deal is dead and that donkey has left and gone to another place to go live. So unfortunately, it's not going to work. Do something else.
So the next question is from Mark Bramble, Winter Park, Florida. A seller's home is vacant and they want $173,000. They owe $148,000. The monthly payment, including PITI, is $815, and they want $1,400 a month. They offered to deduct the amount paid over the mortgage payment, which is $585 from the sales price. No money down. The most we'll get is a 2-year term. Repairs will be about $4,000 to $5,000. Comps in the area are about $180,000. Rents average $1,200 a month.
Wow.
Our exit strategy is to do a lease option with at least $15,000 down, priced at $200,000. Our other thought is to list it on Airbnb, using the profit to purchase the home, then use it as a rental. What do you recommend?
Well, that is a lot of stuff. Let's go ahead and unpack that. So you have a seller that owes $148,000. He wants $173,000 for his house. He's paying $815 a month on a mortgage, and he's asking for $1,400. But the comps in the area, what the market is saying, what you can get is only $1,200. So that right there is a red flag because you're $200 per month in a hole from what the market is going to be able to bear on a monthly rent, and they're being pretty much greedy, is what I'm saying. So that's not going to work because if you're on a 2-year lease, that's $1,200, $2,400 a year that you're in a hole on that deal because you're going backwards. If you're paying $14 to them and the market rent's only $1,200, you're going to be in a hole every single month. Now you're helping the seller by giving them more cash flow from their $815 to $1,400 that if you're agreeing to sell it for. So what I would say is it's a non-deal because no one in their right mind would do that deal if you're going $2,400 a year in a hole and you're putting 15 grand down, or you're trying to receive 15 grand from a tenant buyer, and a tenant buyer's got to pay you anything above the $1,400 if you're going to make the deal work. So I think it's a non-starter on that deal because there's not enough room in there for any spread. The spread is only really going to the seller. They're the one that's got a huge spread between their $815 and the $1,400 that you're making, plus the difference between what you're buying it from the seller and what they owe, they have a huge big gap there. I doubt that you would get $200,000 from a tenant buyer that's going to give you $15,000 down. So I would say either negotiate back with the seller to lower the payment down to what even if you're getting a $1,200 difference, if you're getting $1,200 and you're just breaking even, but you can get a 15 grand non-refundable back, that's money up front. And if you can sell it for 200 or even 180 on the back end, then you'll at least be able to get something on the back end once it's done. But you won't be able to get a sandwich spread there. You'll be able to get some money up front, money on the back, as long as you can get the seller to lower the payment that they're asking for. The $1,400 is way too high, and the market rent's only $1,200. So, and he's making plenty of money even between the $1,200 and the $800 that he's getting. So that's what I would say. Renegotiate, but don't do that deal the way you just described in those terms.
Or you can also...
Hey!
Hello,
Tony.
Tony Pearl here.
Hi,
Thought I might chime in. Would it be all right to help out with you kids?
Absolutely.
All right. So that deal right there, let me see the numbers. Yeah, one other thing you mentioned was the Airbnb. That may be that may open up the ability to do things with this deal, because you're going to definitely be getting a lot more per month. It may take a teeny bit of time for you to build up to that, where you're going to be able to build up the credibility for this property and to command the higher prices for this place. Plus, you still have to furnish it, and you still have to do the repairs. There are some repairs necessary for this place, right?
Right.
$45,000.
So if you can either float that money yourself or borrow it from a private lender or some other means, and you feel very strong about your ability to do this, to raise the money that you need, that would be fantastic. But I would also definitely want to agree with Alton here with respect to the fact that go back in. They may ask for whatever they want to ask. Doesn't mean you're going to give it to them. You should always go back and renegotiate the numbers so that they make sense for you. Okay? So if you feel strong that you're able to perform on these numbers, absolutely excellent. Make it happen.
It's good that it's getting no money down.
Yes.
There's a no money down deal, but don't mistake the no money down deal as real money in your pocket, because you got the $5,000 that you got to lay out on repairs, and you're also going to have to worry about, if you don't get the price down per month, that you're going to be going negative. So that's still money out of your pocket as well. So look at those things, that those are costing you money, and when are you going to get a return? And with the Airbnb play, I really like that, but you got to make sure that that house is in an area where the Airbnb is going to be apropos for...
Where it's legal.
One, legal, check with the city.
Yeah.
And desirable.
And marketable.
And marketable, that you're
Yeah.
going to be able to get those
Absolutely.
rents.
So-
Because you still got that money to lay out for the furnishing of that place as well.
That's right, and the fix-up. So go on there on Airbnb, check to see if there are already units available for rent there and
Yeah.
how much they're renting for. That'll give you a better indication of what you may reasonably be able to expect to get for income on this property. Okay?
Hopefully that works out.
I'm sure it will. How can they go wrong with what we just said?
That's right.
That's right.
I go get that deal.
That's right.
That's right.
Yeah, you don't want it, we'll get it.
All right, so now you got all the details on that one. Let's move on to
That's
the
right.
next one.
Who's next?
So this is Camille Davis from Houston, Texas.
Let's all
Hi,
wave hi to
Camille.
Camille. Hi,
Hey.
Camille.
So I've been doing deals Ron's way for 4 years now, and I'm needing to shelter my income. Yay!
Okay.
So I've set up everything, and my IRA owns the LLC, and my sister is managing the LLC and the bank account. Now, I'm about to buy a property put into the IRA-owned LLC. I'm going to purchase it in a trust and put the LLC as the beneficiary, but I was wondering, can I use my sister to be the trustee if she is also managing the LLC, because my IRA is the owner?
Man, them are a lot of initials, aren't they?
I'm
And
telling you.
there's another part of this.
But wait, there's more.
Yeah.
Okay.
So also, am I able to sign the trust document to set up the trust? Since my IRA owns the LLC, that will be the beneficiary of the trust. Or would my sister have to be the one to sign
Yeah.
the documents?
Yeah.
I understand that I can't touch the money, but I can sign the documents, right?
Let me address a bit of this, if I may start off.
Go
if
ahead,
you guys
go
don't
ahead.
mind. Okay, when it comes to the trust, yes, definitely want to take title to the property in the trust. And when it comes to this, you definitely need a trustee and you need the beneficiary. And they cannot be the same entity, or the trust is invalid. So when you take title, name the trust whatever you want it to be. The trustee is the one who will have control of the property. So that could be anyone that you designate it to be. If you want it to be your sister, because of whatever reason, because you trust her, obviously I would hope, and she has direction of other things, that's fine. If you want it to be an LLC instead of your sister personally, that's fine too, as long as you have the documentation to support who can sign what, who has the right authority. The beneficiary, once again, just needs to be a different entity than that, and the beneficiary is the one who will be responsible for the taxes. So for the sake of convenience, you may want to have the same entity be the beneficiary as is for whatever purpose that you want for the LLC. Okay? As long, again, beneficiary cannot be the same entity as the trustee for any trust. And what were the other issues with the IRA? Who wants to handle that stuff?
Well, I would say, number one, what's her name again?
Camille.
Camille, you should be here where we're at today.
Yep.
Exactly.
We're here at the Building an Empire with Ron LeGrand, and we all have businesses, but we're here to learn how to grow our business and building an empire. And Ron is actually going over exactly what you're asking for starting today. And he's doing it for 2 days here in Jacksonville, Florida. So this is definitely something you should be at to learn more about. And he's going to be doing another one again,
That's
I believe,
right.
in August or something like that. Yeah.
I was about to say that's correct, Captain Obvious, but it's too late
Right.
now. She's not here. So what's the next opportunity for
But
us?
so the next
Business
opportunity,
management.
check on
Business
Go
management.
Business
Business
management.
management.
Business management, which is going to be June, I believe, 6th.
6 to 8.
6 to 8.
6 to 8.
My birthday.
So you should come out because he will definitely address that about that. Because the IRA issue, because I think what you got to figure out, number one, you can't self-deal, and I think that's what we're alluding to. You cannot self-deal. And that's the point of you being in charge of as a manager of your LLC. And if your LLC is controlling the money for the IRA has to stand on its own. And you personally can't control it, but your sister can be a part of that LLC and control that LLC on your behalf, because it would always be in the benefit of the IRA, whatever account number it is in your name. So, but that's something you should ask one of the Quest IRA folks that we have, but also check with your local attorney as well. So that's what I recommend her do that. You're a business advisor, but you should come here and learn more about that and get your questions answered there as well.
Okay.
I just want to add that tomorrow I'm going to the TPC.
Are you? To
Just
Very
because
good.
of all with all what you just said, Alton. Too
Well,
funny.
good. You
I had
should.
to add that in there. Sorry.
That's right.
Okay. So the next question is...
Is this our last question?
Yes, the
Oh,
last
goodness.
question, and it's from Fernando Diaz from Stamford, Connecticut.
Hold on,
Hey,
no.
Fernando.
Hey.
Stanford,
So-
Connecticut.
He says, there is title insurance for bank and one for the buyer. Is there a benefit for the buyer to buy a separate policy?
Is there a benefit for the buyer to buy a separate policy? Okay, are you the buyer, or is your tenant buyer the buyer?
Well,
Or are
this
you
is
selling the
title
property
insurance.
retail?
Okay.
There's
Okay.
title insurance
Okay, yeah.
for the bank and one for the buyer. Is there a benefit
Oh.
for the buyer to buy a separate
For
policy?
title insurance.
Title insurance.
Oh, you get one title on a policy when you buy it.
Here's what you get as a buyer on title, and doesn't have anything to do with the seller. A buyer, if you're getting a loan,
Yes.
some lenders will require you to have a title binder for that loan that you're getting. So if you're getting a bank loan from a bank or
You
a
have to
private
have-
lender, you have to have a title binder to cover that loan.
To guarantee the title of the property.
Right,
Against
right.
any
That's,
defects.
that's completely separate from what the seller can provide for title, because you want clear title when you close escrow. You got a clear title that you get when you close. But we buy houses sometimes cash, and we don't need a title, a binder for that title because we're not getting a loan. We're using cash. But if you're getting a loan from your either local bank or a private lender, they may want you to have a title binder for that loan to cover their loan, because they're trying to cover their interest for the loan in case something goes into default.
We'd have to know the exact type of deal that you're talking about here in order to answer your question with fully. Okay.
Well, yeah, but you can have a separate binder for title on your as a buyer, because you're trying to cover your loan that you're taking out with your lender. That's completely separate from what title insurance that you're getting from a clear title. You're trying to cover and protect that loan, and that's what they call an insurance title binder for that loan.
As a general rule of thumb, as I understand it, Ron likes to say anytime you're bringing cash to the table, whether you have a private lender or hard money lender or there's a bank financing involved, you should have title insurance. You should have your own policy for that. If you're buying property taking over subject to owner financing and there's already a policy in place and you're not bringing money to the table, you may not necessarily have to get it.
Right.
He pretty much says you don't have to do it. So it's up to you as far as what you would like to do in this situation, but in this case, as I understand it, is there a benefit for the buyer to buy a separate policy? I think Alton can answer that right now. So
Yes.
that's pretty much it.
All right.
Okay, thank you guys. Have a good
Bye.